Hey traders, happy Monday. Chris Pulver here. Welcome to the weekly outlook. It is the week of June 8th through June 12th. Take a moment to read the risk disclaimer. We understand there's risk in trading. Please and only use risk capital only, and do not trade with money you cannot afford to lose. My weekly outlook this week is really focused around the Australian dollar. So here is a little funny thing that I found here on Australia. So the stinking friggin' hot desert, mate. That's the only accent I can do. I can talk about, hey, I can do an English accent, and it ends up sounding Australian. So, and it's probably terribly offensive to any Australian. But anyway, Australia has been a really interesting story over the last couple of months because it was the worst currency pair in all of 2019 for the most part. We've had like year plus downtrends on the Aussie. And heading into 2020, when we had bushfires on, a third of the country, it just had a rough start. It had a rough go. We have everything kind of hinging on U.S. and China, which the trade war has caused a lot of uncertainty around risk appetite, and the Australia was suffering because of that. You have bushfires to go on top of that. You throw in COVID on top of that. Yikes! And it was just getting crushed, right? Like March was a horrible month and extreme month for the Aussie, and here we are, 2 months later. Now it's the currency that can't be stopped. It's nuts. It's been an amazing recovery, and to a point, I look at the technicals. To the other point, I look at this is where some of these extremes matter. When we see extreme highs and lows, when we see extremely overbought and oversold conditions, when we see tons of price and momentum disagreement, call that divergence. Those are really strong technical signs. So even with all the wild and crazy fundamentals going on, the technical signs end up giving us our trading decisions. So seeing this on the Australian dollar, that's what leads me into this week's outlook, spending pretty much most of my analysis on the Australian dollar for this reason. I think it's due for another great setup. Okay, so for this video and any others, I mean, if you're in my YouTube channel, again, make sure that you click the like button. I really appreciate that. Pass this video on to your friends and anybody in your trading communities. I have a video series that I'm going to keep doing. I have a list of 10 videos here that I'm going to try to knock out probably over the next 2 to 3 weeks. Just get some more great content out there and put it all under my Keep It Seriously Simple Best Trading Strategy video series. So that's all coming on my YouTube channel. If you're looking to follow me out there on social media, I do also post all of my weekly outlooks and videos I'll post on my YouTube channel. You can just look at my name, Chris Pulver. It's got me in a little suit. That's my YouTube channel. And you can find me on Facebook, Twitter, and Instagram. I also post these videos on Instagram TV or IGTV. So I'd appreciate subscribe to my IG channel. If you want to send me messages as well, I get a lot of direct messages on YouTube and a lot that are asking me for permission or ask me for the ability to contact me on Instagram. Look, just follow me. If you follow me on Instagram, you can send me messages. So that's an easy way for me to make sure that if you're leaving comments or leaving messages, I can find them on my YouTube and Instagram channels and get back to you. So that's it. Let's get into the currency pairs. Like I said, this is all about the Aussie this week. Let me get out of this. All about the Aussie this week. And I just want you to take some notes. I already have some robots running, but I'm really looking at, I'm currently in Aussie CAD. I've got robots running to sell Aussie Swiss, running to sell Aussie Yen, running to sell Aussie Dollar, running to buy Euro Aussie, and looking to buy Pound Aussie. The Aussie New Zealand is the only one that I'm really staying out of right now because that's more of a position trade. We've taken profits, some big profits over the last couple of weeks on Euro Swiss, CAD Swiss, New Zealand dollar. We've had a great run. The dollar's been a little bit weaker. Dollar CAD is one that I started position in last week. I'm looking for oversold conditions. So, one thing to keep in mind as you're looking at my outlook, it's really simple technicals. I've made some really solid technical decisions, regardless of what's happening fundamentally with all the news and all the nonsense, which we have so much noise right now, we have to focus on technicals. So these technicals that I talk about today, make sure you pay attention to the simplicity. Okay, I mean, I'm looking for two things. Are we overbought or oversold? Are we agreeing or disagreeing with price? If price momentum disagree and we're overbought or oversold, that's a really good sign to start looking for trades. Now, it's not trading automatically. It's not jumping in the market right away. It's looking for trades. And so the Aussie pairs are setting up for that right now, where I'm looking to trade. The best part about having some robots or automated systems is I can turn them on with a filtered direction. So if I only want to sell, my robots are looking for selling only conditions. If I only want to buy, they're looking for buying only conditions. Now, it may not be perfect. I might take a couple of small losses, but if I am right overall with my direction, I will make profit and I'll make money. And traders that have been with me for the last several weeks, I mean, we've probably generated, so far my trading room this year is up over 20,000 pips. I'm really happy with that. We have included, one piece of automation with that, my Right Trader Max system. That's not counting some of the other robots that I have running, but these are all trades we've talked about, planned, traded together, and protected together. And 20,000 pips for the first half of the year is a great start. And in fact, we don't have any exotics on that. Last year we had 30,000 pips, but about 3 or 4,000 of those pips came from just a peso trade. I haven't had any trades on exotic pairs, so I'm not, fudging the numbers and saying, oh, I made 10,000 pips on the peso. No, this is all like majors and crosses. So it's been a great start to the year so far. I'm expecting, some of these big decision cycles to end and looking for some range conditions to take us into, most of June and July, and we transition out of that. August, September, October. A lot of times I do look for these pre and post summer breakouts. August, September, of course, being the post summer breakout. I don't know if we're going to get much of that this year. I think that everything going on politically right now, the political climate in the U.S. And globally, but central banks have their part, COVID has its part, new normal, and all businesses returning back to normal, trying to or not. We are going to see, we are seeing a complete disconnect between reality and the economy and the stock markets. We are looking at a political culture and a civil culture right now in the U.S. that is really tense. It's crazy. So I think the election is going to be a big part of where our next big catalyst is. And that's not until November. But we have, primaries in August. We have November as the main election. So it's going to be an interesting way to see how summer develops. I'm trying to do a better job of limiting my exposure, keeping my margin as high as possible, and just continue to take good trades and piece together some nice, solid profits. So that is it. Focus on those Aussie pairs. Focus on those. I'll go some yen pairs as well for some risk on and risk off trading. But at the end of the day, it's technicals. So let me know what you think. If you like the video, again, please click like on the YouTube channel and subscribe to my channels out there on YouTube, Instagram, and follow me on social media. I appreciate that. They get you all this content here. I'll have those videos coming on my best trading strategy. Keep it seriously simple over the next couple of weeks. And that's it. So let's dive right into those markets. Here's the SPY. Okay, now one might argue that there is officially a V-bottom recovery in the market and everything's going to be just like it was, which I disagree with. And I don't think that I'm off my rocker thinking that this is a bull trap. I think all this stuff as far as the recovery goes, this analysis that I've had for the last couple of years, we had a high in October and then it dropped, right? So we had this high in October, we had a correction, and I want you to pay attention to how this market has been behaving. We have a correction. The market finds a way to just fight back, fight back, fight back, fight back, fight back, fight back, all the way back up to the same high and possibly even through the high. But that often has led to the bull trap of then the bears taking back over. And then we see a bottom again and the market fights back, fights back, fights back, fights back. And even this entire area was a fight back to where I think we had this emotional, euphoric, ridiculous run where it's like the market can't be stopped. Well, it did get stopped. Like it hit a brick wall thanks to coronavirus and thanks to everything else that was already going to happen. It's just what was the reason for all this to happen? And so we have this drop, it fights back. We have this drop, it fights back. We have this drop, and it spent the last 2 months in April and May fighting back. All right. Now we're back to, the NASDAQ, I had a chart on the NASDAQ actually hit the same high we had back in February. And my alert went off last week, and I put the letters WTF. Like, what the fudge is happening right now? But this fight back, I don't think that this is the bottom. I don't think that we are in a better place economically. I don't think that the stock market is in a better place, than it was 10 months ago, 6 months ago, right? I mean, February highs, I was really leery of those February highs. I was certainly, uncomfortable seeing new highs going into late last year, but we had a central bank safety net. And there was a rally from August of 2019 into the new year. And then we start off with this, just giant cleansing from COVID and everything's coming back. And then we're figuring out where the new normal is and how the economy is going to recover and how many people are coming back to work or willing to come back to work. And then you look at last week's non-farm payroll, which is like, wow, the U.S. created 2.5 million jobs, the greatest on record. Well, we lost 30 million jobs or had 30 plus million people file for unemployment. Benefits are running out July 31st. Right? This is not normal. Like these extremes are ridiculous. So what are we doing? We're talking through this. We're staying pragmatic, and we're going to continue to make good, sound decisions. So I am, as a stock investor, as a stock trader, I have taken the profits on most of my positions, the profits that I've taken from March's low, April's levels, getting some double bottoms in stocks. Probably a dozen plus stocks that I purchased over the last couple of months have seen runs of 30 to 50+%. I am protecting those gains. I'm closing out some of those positions for the short term, and I'm going to take that profit, apply that profit later. So I think that this run right now, and look, if we come all the way back up to the same high, I don't know why my drawing tool is being a real turd here. But give me a second. There we go. If we come back to the same high or the same high from February, I think that is another bull trap. I think that this is a remarkable recovery, but this broadening formation is still valid, which means, and this is what makes it confusing, broadening formations are difficult to trade for this reason. The bulls continue to make higher highs, but the bears continue to make lower lows. So for traders that are looking for some structure, the only thing you can continue to spot is that we have these highs that we're trying to sell from this high, trying to sell from this high, trying to sell from this high, trying to sell from this high. But the swings and the extremes that you see, buy from this low, buy from this low, buy from this low, they are crazy, right? I mean, this swing, you can see that the volatility gets bigger. So if we're going to head back down again, you can see that we're going to have possibly the same high from February 2020, possibly a new high if this irrationality and this, amazing recovery continues. I don't think it's the real thing. I don't think we're in a better place than we were last year. I think that, yes, central banks are a part of this process, and they've certainly helped. Probably 80% of the recovery has been central bank related and narrative related. But look, does the broadening formation change? The answer to that, in my opinion, is no. So what am I doing? All right, I'm taking my stock profits. I'm going to reapply them at better prices. I'm going to be patient in stocks. Forex will be my most active instrument that I trade. And so that's what I want to spend today's session on, is what am I doing for this week with my Forex trades? And it's really all focused on the Aussie pairs. I think right now the technical alignments on the Aussie is by far the best. We've had, a currency pair, the Aussie, has been the worst currency pair for the start of 2020. It couldn't win. We've had downward trends in the Aussie pairs for over a year, and the Aussie just couldn't get a break. We had, tensions in U.S. and China that are still on the surface, right? Everything going on with China and Hong Kong, and the U.S. getting involved in trade war and tariffs are re-escalating. Like, relationships do not seem solid, or at least on solid footing for the U.S. and China at this time, which is, again, kind of clouding this recovery, and the market just doesn't seem to care. Anyway, the Aussie was like the weakest currency pair going into 2020, had a horrible quarter, but yet now it's like the strongest. And what an amazing recovery we've seen. So I'm looking at some of the technicals of, yes, great job Australian dollar, amazing recovery, but unanimously, what I see across the board with some of my favorite technical setups is this. I see price making higher highs, and I see momentum disagreeing. I see overbought conditions, or in some cases oversold. So if we're seeing lower lows in price and disagreeing with momentum and oversold conditions, I'm looking to buy. If we see overbought conditions with price making higher highs and disagreeing, I'm looking to sell. So this is the Aussie CAD. I'm looking for confirmation to sell. I am currently in 3 trades. Okay, now I got in based on some target levels. I got in based on some of these Fibonacci swings. We have seen here that we have a low to high with a 382 pullback that has gone up to the D extension. We have not officially formed the fractal high yet, but with these last 3 or 4 days of indecision, with a currency pair like this that typically does not get out of balance, I believe that this currency pair is going to end up falling. I don't know why my freehand tool is not working today, but that's fine. I think this will end up falling back down into 9,000. So I'm looking for a fallback into 9,000. These are my current trades. What I will probably do is something like this. Okay, I sold it at 94, currently trading at 93.60. I'm upside down in a couple of small positions, but if my 9100 level can get back to break even, and I can close my 91.80 and I can close my 9400, I'll probably take profit on those two pairs and be done with this. But I think destination-wise, having a new AB boundary, and I'm just going to drag this one over here. So there's our low, and I'm anticipating that we're forming a high now-ish, right? This is about the high that we're going to have forming. This is our new AB boundary. Even if we pull back to a 38% level, we're around 90.70. Okay, if we pull back to the 50% level, which is a perfect balancing point, we're below 9,000. So do I think that I can get my profits at 9,100? I do. I think I can turn that into break even. I can probably hang on to that a little bit. But I'm fine getting out of the trade around 91, which means I'm looking for a movement to be bearish. Okay, now this is not necessarily CAD strength. To me, this is all about Aussie overextensions, overbought conditions, Aussie extremes that we've seen. Also, this is about decision cycles coming to an end. Okay, we oftentimes will notice that markets will go decision. This is going to drive me crazy. We'll notice that the market has, these aggressive trends, and then this aggressive trend. This is terribly drawn. Let me just freehand it. Okay, so if we have an aggressive trend, which we had back in March, we had in April and May, I believe that we're going to end up finding something like this. We're going to have a recovery, we're going to have a correction, we're going to have some balance, but we're going to end up going into more indecision. All right. So we've had some great expansionary moves. We have some great decision cycles, some amazing trends through March and April and May. Now, leading into this summer trading, I'm looking for some tops and bottoms to form. Technically, we have all the signs to start looking for those tops and bottoms to form. So with the next kind of top or bottom forming, whatever correction comes from that, I'm looking to take some pretty nice profit on. From there, once we have our correction taking place, we're taking some profits, then start looking for those intermediate highs and lows to form, and we'll start identifying some range-like conditions for the next couple of months. All right, so I think that going into the end of this month in June, going into July and August, I would expect there to be some intermediate highs and lows that we can buy and sell from. If we want to be more active, we can have some robot trades picking up some range conditions for us. There should be some pretty good range trading here for the next couple of months. And truthfully, even heading into the end of the summer, into the election, which will be, to me, one of the next big catalysts in the stock market. And if the stock market's moving, the currency market's going to move. And I mean, it's certainly going to be a catalyst across the board. This U.S. election, to me, seems like one of the most extreme elections we've had in a while. At least for the U.S., to me, the sentiment is, we have a ton of racial tensions. We have the most divisive nation I think we've had in a long, long time, and tensions are running pretty hot. Not to mention, this is all piggybacked on top of COVID stuff and people out of work or getting back to work or trying to get back to normal. So tensions are high, to say the least. So, but again, going into this summer, lower volume, lower volatility, expect some trend or range conditions to form. I think Aussie CAD is going to be due for some type of correction for us, hopefully back into 9,000. And then from there, we may just go sideways, right? We might just go back to 9,000 and then start to go sideways and then see where the next big trend is. Is this next big trend going to be we go sideways here and we come all the way back down and we, just stay in this channel? Look at this. This is still a large channel on the Aussie CAD. Try to get that line there. This is still a large channel. Now, are we on the verge of breaking to the upside? We sure are. So could we go higher? Yeah, we could be putting in the bottom, and this is a reversal pattern to go back up towards 1.03. But if this is the top and we start coming back into channel bound conditions, then we come all the way back down to 83, 82, maybe even 8,000. So, I mean, we're going to watch and we're going to make good decisions, but right now my good decision is based on technical elements. I have extremes, I have highs and lows. I'm looking for disagreement, which I have. I'm looking for overbought conditions, which I have. That's what's leading me to believe that the Aussie is going to be dropping soon. Aussie CAD looks great. Aussie Swiss looks great. Here's the daily chart. Disagreement, overbought conditions. Take this down to a smaller time frame. Look for a trendline break. Okay. Do we have an aggressive trendline break happening? Yep. I'm looking for this to start carving out some highs, start moving back into some levels like a trendline support, possibly more, right? We could have this drop to this trendline. We could have this drop all the way back down into 6,000 again. So I have my right Trader Max robot running to the downside, looking to sell only. It needs some confirmation first, but once it gets it, it will start looking to sell. And I will be actively looking to protect my profits. And if I think that it's done a pretty good job of taking some sell trades and profits for me, like it did taking buy trades for me, then I will start looking at the levels where I think we're hitting some support, turn off my robots and start assessing, maybe we have some range conditions forming over the next couple of months. So I still think we can look at some trend systems. I'm looking at trend systems to start taking corrective trades. This was a bullish trend on the Aussie Swiss. It was a bullish trend on Aussie CAD, bullish trend on Aussie Yen. I'm looking for those to start looking at the opposite direction on smaller time frames. So I'm looking to sell only on the Aussie Yen, looking to sell only on the Aussie Swiss, looking to sell only on the Aussie CAD, right? But the alignments you can see here, there's consistency. It's the exact same. And technically speaking, when this happens, when you have a basket setting up with really good technical alignments, it just tends to work out. Now, unfortunately, this week, we don't have a ton of news, right? We don't have a ton of news. This is all the high impact news this week. So if I put in medium and low and try to make some sense of maybe we have this and this, that doesn't really matter. This to me is the news. It's all about the Fed this week. I think we already know what the Fed's going to do. Nothing. They're not going to change rates. They're going to acknowledge the current conditions. They're going to now acknowledge that, people need to get back to work or trying to get back to work. What really shows a robust recovery for the U.S. is that people are getting back to work and willing to spend money. And people are willing to be back to work and willing to borrow money and pay for things on debt because that's what the U.S. is. We're a consumer nation. So, I mean, this comes into the banking system. Are banks willing to loan? I know that they're starting to really contract. They're not looking to lend to certain, auto dealerships anymore because the fear of delinquency and subprime auto loans could be our next big bubble. I know student loans is a question as well. All these things are going to kind of snowball into the election later this year. But for this week, the focus is, yes, there's a Fed rate decision. Yes, there's going to be some news on Wednesday. But is it going to be a big, impactful event with a ton of movement? Probably not, because I think the narrative's already established. Central banks are here to be a safety net for now. But when stimulus runs out and benefits run out and things are changing here over the next couple of months, I think it's going to be just that harsh reality of like, where is everything at? Are we in a better position? Is the stock market at highs from February? Are we in a better position truly than we were, 6 months ago or 8 months ago or a year ago? Probably not. So it is going to be really interesting to see how things develop. I, for one, think that we're going to have some risk-off trading coming ahead. I think we're going to have some range conditions coming ahead. So that means that these extremes and these tops and bottoms that have been forming are going to start looking to balance. But it's a much lighter calendar this week than we had last week. All right. And today, especially, I mean, lower volatility. You look at the currency strength chart for this morning, very low. I mean, 30 and 30 on this currency strength chart. I want to see like 50 plus. So you can see everything is kind of jumbled around. The Swiss is getting a little bit stronger today. The Aussie New Zealand started out fairly strong, but they've given some back. There's just not a lot of movement overall. The Swiss has made a pretty good run here this morning, but not really enough to stick out and be like, oh, that's really strong and really weak. Not really happening today. But after non-farm last week, not a surprise. Okay, so Aussie Swiss, Aussie CAD looking to sell. Aussie Yen, same thing, looking to sell. All right. Now this one had a pretty big extreme. Here is the daily chart as well. Do we hit a D extension? We hit our A, B, C, D extension. Now we do have room, and just because we had the 38%, there is a correlation to a 2618. Now, I'm not suggesting that right now the Aussie yen is going to continue to run higher. But if it does, if it defies the divergence right now, if it defies the overbought conditions right now, it can still run to these previous highs, which it's at right now. It can still run to that round number at 80. But I am only interested on this Aussie yen right now, and certainly at 80 to be a seller. And if I'm going to be a seller, if I'm starting to get sell trades lined up now on a shorter time frame, I'm going to try to take it back down into this conservative breakout point, which is around 72.00. So if we go up to 80 and I get a sell opportunity, I'm looking at 800 pips. If we start turning now on a smaller time frame, I'm still looking at 400 pips. So it does, and look, we've gone, I mean, for crying out loud, we've gone from 60 to 76. We've gone 1,600 pips with very little pullback. So even if we were to have a 38% retracement, a 50% retracement, It just means we have those correction levels come in that we can take advantage of, and then we start looking at intermediate levels for support and resistance to form range conditions. But the next trade, hopefully for this week or the next couple of weeks, is a correction trade that is still going to feel like a short-term trend trade, and that gives traders a chance to take advantage of it, and then we'll start identifying some highs and lows. All right, so I'm looking for a chance to sell this. If we go to a smaller time frame, here's my 4-hour. Okay, I'm just looking for price. And again, you see here, it's an aggressive trend line. It's starting to break that trend line. That's fine. What I get in right now, it's possible if you wanted to sell it, you can look at selling now. I happen to have robots running on this to get sell confirmation. So if I can see my robot picking up a sell trade, which is right here, hopefully see it logs me in. Give me a second here. So I'm waiting for my VPS to load up. It's looking for a sell trade. Actually, it's pretty easy. I can show you on Right Trader Max if it's in it or not. My 30-minute chart is not in a sell zone yet. My 15-minute chart is not in a sell zone yet. So my robot is not sold yet. It needs confirmation. So I need my price to be red. I need my ribbons to cross over. I need everything to be lining up. But you can see here with all of these pockets and inefficiencies, we should see the Aussie yen allowing it to go lower. And 7,200, by the way, gets me all the way back down to this little pocket, which is where the breakout started on the daily chart. Nice little correlation there, right? I like that. So if we have some confirmation, my robot's going to start picking up some sell trades. I'm going to start turning that off around 72 and then start identifying those highs and lows for some range trades. Aussie New Zealand. This one I'm going to keep an eye on. We are currently trading around 107. Let's go to the higher time frame here. We had a great run for the first, actually through April. This move here bottomed out in March, ran all the way up into my profit target in April, and we took our profit. So I would like to see kind of how the rest of this plays out. I am kind of hoping that we have this. This is driving me crazy today. Something like this. If we have this support holding, this resistance holding, and it gets a little choppy in here, that's fine. But what I'm looking for is when does price actually break the structure and start to sell off a little bit? Now, I'm really not interested in selling. Like I said, I would like to see this just kind of drop and correct that I can buy it lower. I want to buy this lower. I want to buy it at 105, 104, 103. Right? But I'm not ready to sell the Aussie New Zealand. In fact, I honestly don't think I'm going to. I'm just kind of crossing my fingers that we come back down into a buyable level, like 105, 104, 103, and then I'll buy it. So that's going to be my plan on the Aussie New Zealand. Just wait. I want to see if I can get filled at these levels as a longer term. This to me is a bottoming formation. We're looking for a pullback, a balance. Sure, let's find some targets, let's find some pockets, all that good stuff. We also have disagreement between price and momentum. We're testing, we haven't hit it yet, but we're testing these highs on the relative strength for some overbought conditions. So it makes sense to me that the Aussie basket gets a little bit softer, come back into some of these pullback levels, and then we look at the larger swing to the upside. And hopefully that plays out just like it did for the last several months when we made some big profits on that pair. Right? So that's my Aussie New Zealand. All right, Aussie dollar. Aussie dollar, we have some channel support. We have a lot of candles in a row, actually. That's one thing I noticed on a lot of these Aussie pairs. We have like 7, 8 candles in a row. Daily chart on the Aussie dollar, you can see some overstretched conditions. Take a look. Price is making higher highs. Disagreement with momentum. Overbought conditions. Same alignments, right? So this is good stuff. I like finding this. I think the Aussie dollar actually sets up really nicely for a rising wedge, which we thought we kind of had one early on. It just didn't play out. But look at the top of the channel. Look at this rising wedge at the top of the channel. To me, it looks like we get some bearishness forming. We look for some, system confirmation, some robot confirmation to sell. Conservatively, we get some sell trades coming in around like 6,900. And we sell off towards around 6,700. Now, we could certainly make a case where this just goes to channel lows and breaks that channel low, pulls back, and then falls all the way back down to 6,200, 6,250. I would be fine with that. But to start this out, I want to see this, get bearish, get down to this channel support, take some short-term profit. Then let's see if price can confirm it. So if we have price breaking out here, then we look for the pullback and the slide lower. And that could be a really simple A, B, C, D correctional move to the downside. Okay, but it all starts with this current price action, which has to be a break of this rising wedge, and we'll look for that to sell off a little bit lower. Okay, Euro Aussie is next. Euro Aussie, we've actually talked quite a bit about this in my trading room, the Flex trading room. We established a low here around 60, what was that, 6038? 6032. And we are now on the right side of that trend line. This is where I really kind of got the notion for decision cycles, indecision cycles, what this market's likely going to do over the next couple of months. Now we have 6,000 as a nice round number. We had, 5,900 and 6,000 provide a ton of support here for the last couple of years. We have resistance around 6,500. So to me, all of this indecision led to this massive decision cycle. So we have this, 3,800 pip trend to the upside, 3,800 pip correction to the downside. And at the end of all this, when the dust settles, price is actually nowhere. Okay. However, as a trader, there is ridiculous amounts of opportunity because this was a crazy big breakout. And again, look what price did. We break above, we pull back, we just blast off to the upside, establish the flash crash highs, establish all of the disagreement. And you can see the same alignments I'm talking about. Look at the extremes. We have a high in price, a high in price. You can see the disagreement that became the high and the sell point. Look at what we have going on right now. We have lows in price, lows in price. You can see the disagreement. Okay, are we oversold on the Euro Aussie? Not quite yet. So we may still push a little bit lower. I just noticed today that my right trader system I've been running bullish did take a small loss overnight. That's okay. I'm going to let this be a buy only. I think we're going to carve out some lows around 1.60. We might tap this oversold condition, but the divergence is in. We have a ton of support for the last couple of years. I think if we can round out some bottoms around 1.60, 1.5950, we start looking for buy lows and we take this back up for a conservative few hundred pips, like 1.60 to 1.65, and we range trade. So range conditions, big trend, and we go back into an indecision cycle or range conditions. So I think this one is lining up to be, and again, like just market is just moving and drive until the wheels fall off, and it's like, hey, let's get this fixed. Let's get back to normal. Let's not go crazy. And so we have indecision that's probably going to be coming here over the next couple of months. But we need to find out where that low is going to form. We had that chance around 1.6032. I was telling traders to get ready for some price action scenarios. Either we test this low again, we test the 1.60 round number. I'm looking to buy that. All right, so I have a robot that's running to buy only. I'm looking for some manual positions to probably start, pending order around 1.59. Or I'm sorry, 1.60 and 1.59, which I put in last week. So those are pending buys just at some nice levels. And I'm planning on taking this back towards this green line around 64.50 and a nice conservative level around 6,500. So that's still, 400 to 500 pips of movement if we can get filled around 1.60. And I think it's a good trade. And pound Aussie, in a very similar technical scenario. Pound Aussie after this trend, high to low, shallow pullback, but it's enough to hit this de-extension around 8050. Now look at the last 3 or 4 days of indecision. Okay, so do we have oversold conditions? Yes. Do we have disagreement? Yes. Could we drift a little bit lower on this? Possibly. But the basket looks really good. So do we need some confirmation? I would love some confirmation. Let's see if this pound Aussie can go sideways. Let's see if we can round out these lows, start getting on the right-hand side of this trend line, and head up for a couple hundred pips. If we start rounding out these lows, do we come back into this past support around 1.90? Sure. We're trading at 81.65. There is several hundred pips to get back to 1.90. Okay, if we go down a little bit lower and we carve out some levels, let's say right at the round number at 8,000 or maybe even 78 or 7,600, that's fine. Look, if we don't break this trend line, we really shouldn't be buying yet. Even though the conditions are there, we don't have confirmation to break the trend line. But when we see confirmation or we have a system getting in for the shorter term buy trades, I know that I might have some imperfect trades now, but if this does break the trend line and head back to 1.90, I will be nicely profitable. So again, I have my right trader max running to buy only, and it's trying to take profit around 1.90. If it goes down a little bit lower, it won't take any buy trades until it's confirmed. So that's good. I mean, I can just sit here and watch this one, but knowing that the technicals are there, the alignments for oversold conditions, divergence between all the lows is a good sign technically. So the Aussie CAD, Aussie Swiss, Aussie Yen, Aussie New Zealand, let's just throw that one out for now because that's, commodity versus commodity. Aussie dollar, that's a good one. Euro Aussie, pound Aussie. 6 of your 7 trades I'm looking for Aussie weakness to kind of dominate the next phase. And how is it going to happen? I don't know. I don't care. Is it news out of U.S. and China? Maybe. Okay. Is it Australia news? I don't know. I don't care. There's nothing on the calendar this week that says it's going to be the Aussie news. There's nothing this week that suggests it's really going to be anything. Okay. So it just tends to happen. And what we've noticed is we've been in this pair, the Euro Swiss, for the last couple of months. And we were wondering what is going to make this turn the corner. What's going to make this carve out these lows? How are we going to go from 105 to 108 or 105 to 110? Nothing really happened, but yet price just followed along. So the technicals to me, and this is what we keep going back to, is we can have these discussions. We can talk about all these things happening fundamentally and how to follow the news and how to trade the news successfully. And look, you got to know the news, right? You got to be aware of what's going on, but don't let it cloud your decision making. Okay. I mean, for a Forex trader, even at this point, my decisions in March, in April, in stocks were technical. I mean, fundamentally, it's like, why would you buy anything in March? Well, technically, that's the last time I've had a good opportunity. We've been waiting like 5, 6, 7 years to get really good dips to buy and have these crazy discounts on stocks. When a stock loses, 60, 70, 80% of its value in a month, kind of interested in taking a little piece of it and see like what does it do. And it's been a great couple of months, but I'm taking those profits and I'm going to buy later. I'm going to wait. But Forex wise, I mean, same thing. I mean, this did not really have a reason that the Euro Swiss started to go higher, but it did, and I'm happy, and we made a lot of profit there. So I'm still looking for this to go higher. I think the Euro Swiss does ultimately head up to 110. But I'm still going to hold it. I have positions still in. I have positions still holding. I did take a nice chunk of profit around 107.50 and 108.00, and I'm looking for the next leg up to be around 110. Other pairs this week that I'm interested in looking for, I will follow some of the yen pairs. So Aussie yen we already did because I'm looking for that Aussie to round it out, but we could have a stronger yen as well. The CAD yen this week, if we start rounding out and starting to show some indecision, we have a lot of these big breakout points on the daily chart. So what I'm looking for here, and again, without confirmation, don't force any sell trades. Like, don't go against the grain here. Look for a smaller time frame, look for confirmation. But for really a lot of this was going into April. Let me see when this candle was. May 31st. So end of May, that first trading day in June. Let me see what that calendar was. That first trading day in June was, let's see here, June 1 was Monday. So the end of May going into June 1, there was a really strong push that, to me, has created some imbalances. So I like, if I'm going to be selling, Aussie yen and CAD yen and Euro yen, pound yen, dollar yen, New Zealand yen, if I'm looking for confirmation to sell those currency pairs, I would look at those June 1 candles on the daily chart, and that would be my short-term destination. If I can sell it here, I'm going to look to take it back down to that June 1 level. Now, this CAD yen may drift a little bit higher. I think that after having, 6 or 7 candles in a row, we're probably going to pause a little bit. But if it starts to go down, I'm looking at that June 1 candle. If it starts to go up, I may participate in the short term, but more than likely this resistance, which is right around 85, with that type of vertical run to the upside, again, I'm not just going to sell it there, but I would have confirmation and shorter time frames getting me some bearishness. All right, but I'm looking for the yen pairs to start to balance as well. So is that a shift in risk appetite? Very possible, right? Aussie is a risk on currency pair. Japanese yen is a risk off currency pair if they're going to get stronger. So risk on, Aussie has been strong for the last couple of months. If we shift into risk off trading, the Aussie gets weaker, the yen gets stronger, the dollar probably gets stronger, the Swiss might get stronger. So we might have a shift now. We might have a shift over the next couple of weeks to, again, establish and round out some of those tops and bottoms. So that's CAD yen. Swiss yen, actually, this week, this was, I'm going to talk about this more on Tuesday, Wednesday, Thursday for my trading rooms. I do think that Swiss yen is going to offer us a chance to sell high with a pretty decent risk reward setup. I'm looking to sell this if we can retest the backside of this trend line. I want to see it break the trend line, come back and retest, or break the trend line, pause, look for a chance to sell it. We can work some positions in here and put our stop loss above 114.50 or so. But if we break that trend line and hold those highs, we start pushing back down. We're looking for a stop loss anywhere between like 50 to 100 pips. Go after 200 pips of profit. something pretty conservative, but at a decent resistance point on the Swiss yen. I think we can sell that for a small risk, decent profit. Euro yen. Euro yen has just done some pretty amazing work. That yellow box there is my daily pocket. That's the June 1 candle right there. Okay, look at that June 1 candle, just blast off. So could we come back and balance it? Yep. So we go up here. We have like how many candles in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9 in a row. We're starting to see indecision here at the top. If this becomes the nice evening star pattern or a candlestick formation, I expect this to drop back into that June 1 candle, which is around 120.00. Pound yen, same thing. A lot of candles in a row. There's your June 1 breakout. If we have some confirmation to sell it, looking to sell this back into that June 1 candle, which is around conservatively around 134.00. New Zealand yen, if we have some confirmation, I sound like a broken record, but that's the plan. If we have some confirmation to start selling, there is a June 1 candle here looking for levels around 6,700, 67.00. And dollar yen, I'm going to leave this one alone. I don't think dollar yen is really that clear. I think this is going to be one that's probably traded after the election. So here's my weekly chart. Here's my weekly outlook on the dollar yen. There's a lot of room to the upside. If we have, and I don't know if this is going to be really the source of it, but, let's say that Trump wins again and gets reelected. Well, the markets might love it, and we might have just risk on, risk on. Everything's going to be just ballistic. So risk on trading would be straight up towards 120, straight up possibly to previous highs around 125. Where, by the way, this was the 2016 Trump trade, right? Our election in 2016 was this run from roughly 105 all the way up to 118. So could we repeat that and run back up to 118 and have some open space to get back to these highs around 125? Absolutely. But at this juncture of the dollar yen, I don't like where it sits. I'm not really interested in trading this. I'm kind of looking at the big wide open space. If we break above 112, I'll trade it up towards 118. If we break below 105, I'm trading that back down to 100.00. So, to the upside, there might be 1,000 pips. To the downside, there might be a safe 500. There's a lot of defense here at 100, even. That's parity for the dollar yen. But if we break below 100, oof, this is going to get ugly. If we break below 100, we're talking about levels at 90, levels at 80. Thousands of pips at the downside. But that comes with a price of risk off and safe haven, and the economic outlook is very, very gloomy if we're going to go breaking below 100 and falling a few thousand pips. That would be pretty messy. However, as a trader, it would be an amazing opportunity. So we'll see, right? But dollar yen right now, not interested in it until we start breaking these open spaces. This to me is going to be one I focus on during the election later this year if we have a major catalyst. But I'll watch it and we'll talk about it. So that's really it. This week's focus for me is Aussie pairs, yen pairs. If you're trading the yen pairs, look for confirmation. I really like those June 1 breakout levels. Those are inefficiencies that I think price can get back to. Aussie pairs have the best technicals for the extremes. Overbought, oversold conditions, divergence, which means price and momentum are disagreeing. Look for confirmation on a shorter time frame. I'm looking for price patterns on 1-hour charts. I'm looking for systems on a 15-minute chart or a 30-minute chart to start getting me in the proper, direction. If it's an overbought condition, I'm looking for a 15-minute sell zone. Right? It makes sense. So if you're overbought, you're looking for a sell zone. If you're oversold, you're looking for a buy zone. That helps us sell high and buy low. So that'll do it. I'll go and wrap up this recording here. If you have any questions, feel free to reach out. All of us are having trading rooms this week. I'll run my trading room, my flex trading room on Tuesday, Wednesday, Thursday. My Right Trader Max robot will be doing some work. I'm hoping we see some decent volatility this week for some of these corrective moves. But I think our best alignment. So currently, Aussie is going to be my main focus this week. I do have positions I took recently on the dollar CAD, dollar Swiss I cashed in last week, euro dollar we cashed in last week. I have robots running on, I know, Euro New Zealand and Pound New Zealand in addition to some of the Aussie pairs. So hopefully the Aussie is going to pay us this week. If it does, 2 thumbs up for that. If it doesn't, then we wait. But I think the technicals are good, and I think they're great, actually. So that's it, traders. That'll do it for this weekly outlook for the week of June 8th through June 12th. I look forward to trading with everyone this week in the Flex trading room, and a lot of good trades to come, some great technical alignments, and we'll see where the news takes us, see where the Fed takes us this week. But please do me the favor, like this video, subscribe to the channel, and I will see you in the markets, everybody. Take care. Bye.